Welcome to today's Explainer. We're jumping right into a pretty incredible piece of history today. Think about this for a second. A massive, insanely expensive problem from centuries ago accidentally created one of the most powerful financial engines on the planet.
So, how exactly did the stock market begin? We hear about it literally all the time, right? It's on our phones, in the news, and it's deeply tied to our retirement accounts. But obviously, it wasn't always just sitting there on a screen. It actually emerged from a very real, very physical challenge. Let's get into it.
Section 1. The costly business problem.
Picture this. Long ago, getting a business off the ground was a whole lot harder than it is today. If a merchant wanted to launch a huge trading expedition, build a fleet of ships, or really start any major enterprise, they needed a mountain of cash up front. And honestly, most people just didn't have that kind of wealth lying around. So this created a huge bottleneck. You had all these incredibly profitable opportunities out there, but practically no one could afford to take advantage of them alone. That's when a brilliant new idea started to take shape. Instead of one ultra-wealthy merchant taking on all the risk, what if a bunch of people pitched in smaller amounts? They share the cost, and then they share the profits. That simple shift, that's the absolute bedrock of the stock market.
Section 2. High risks on the seas.
Fast forward to the 1600s. European trade is just exploding across the oceans. Trading companies are sending ships out into vast, really dangerous waters specifically to bring back highly valuable goods. We're talking spices, silk, and tea. These were the absolute treasures of the era. If you could pull off a voyage like this, the profits were staggering.
But here's the catch, and it's a big one. These voyages weren't just ridiculously expensive, they were terrifyingly risky. A single ship could get wiped out in a violent storm or, intercepted by pirates. If you were a sole investor bankrolling the whole thing, one sunken ship meant you literally lost everything. Complete financial ruin was always just one bad storm away.
Section 3. Inventing the ownership share.
To survive those kind of catastrophic literal risks, companies desperately needed to spread the danger around, so they started selling ownership shares to multiple investors. Think of it like slicing up a pie. Anyone who bought a slice, a share, owned a small, affordable piece of that company. And the beauty of it was, because you only owned a slice, if the ship went down, you only lost your small investment, not your entire life savings. But if that ship came back loaded with silk and spices, you got a proportionate slice of those massive profits.
Section 4. The first public company.
This idea really hit the big time in the year 1602. That's when the famous Dutch East India Company came onto the scene. In 1602, they became one of the very first enterprises in history to sell these ownership shares to the general public on a truly massive scale.
Section 5. Birth of the stock exchange.
Now, this new system was wildly successful, but it instantly created a new logistical headache. Investors bought these shares, but then they realized, hey, I want to be able to buy and sell these without waiting months or years for a ship to actually finish its voyage. As a result, traders just started gathering in designated locations to exchange shares with each other. These organic, everyday meeting places naturally evolved into the world's very first stock exchanges. For the first time ever, you could invest in a business, sell your ownership to someone else, and make a profit without ever setting foot on a boat.
Section 6. The modern global market.
When you pull back and look at the timeline from those early meeting places in the 1600s, the evolution is just incredible. Over the centuries, stock markets naturally expanded way beyond Europe, spreading to America and the rest of the world. And obviously, things look a bit different today than those 17th century wooden ships. Today, we've got millions of investors buying and selling shares every single day, using lightning-fast electronic exchanges fully connected by computers and the internet.
But here's the crazy part. Even with all our high-tech systems, those millions of electronic trades happening right now around the world are built on the exact same brilliant foundation. Step 1, share the enormous cost. Step 2, share the catastrophic risk. And Step 3, share the massive rewards.
Which brings us to our core takeaway for today's explainer. It all started with one simple idea: allowing many people to share the cost, risk, and rewards of a business. This one concept totally revolutionized global commerce forever. It took an impossible financial hurdle for a single merchant and turned it into a dynamic engine of growth for millions of people. Every time you look at a stock ticker, you're looking at a system originally designed to protect wooden ships from pirates and storms. Makes you wonder, doesn't it? What seemingly impossible problem are we facing today that's accidentally going to create the next 400-year financial revolution? Thanks for joining me on today's Explainer, and keep exploring.